Hey everybody, Tim here again. Today's video is all about how the winners win when they spread bet. And there is one thing that all of the most successful traders have in common, and that of course is that they all trade with momentum. So let's take a look at what momentum actually is so we can fully understand it. Momentum is either the upward or downward movement of a stock. And how do we profit from it? The real trick with momentum is to try and catch it early. What's happening here is that the experts will notice that a stock is either overvalued or undervalued, and then they'll either move to buy strongly or sell strongly, and then a herd mentality will take place. Now if we catch it before the majority of the herd, then we can stand to make quite a lot of profit. However, there is a cautionary note here too. If we were to go too early and follow what we believe is momentum, it might not be momentum at all. It might just be random price movements. However, later in this video, I'm going to talk about a few ways that we can easily assess whether momentum is actually taking place. At this point, I believe it's very important to distinguish the difference between traders and investors. Investors are people who choose to invest in a company that they own an actual share of. They want the company to do well, and they often invest because they believe that it will make profits for them in the future. Because of this, they care about the company. They want to see it thrive. An example of this is Warren Buffett, the world's richest man. He famously only invests long term. Traders, on the other hand, are a completely different breed. As a trader, you shouldn't care about the company or even its value. The company is there purely as a vehicle to make profit. Our only concern as a calculated trader is the profit we make from each trade. It doesn't matter at all whether you like the company or not. So let's talk about spread betting for profits. As a spread better, the only thing that you should concern yourself with is trying to make the most amount of profit possible. Because of this, things like moral implications shouldn't even come into play. Here's an example. If you bet on a tobacco company, you needn't think of the ethics because you're not actually buying a share of the company. You are merely betting against the spread betting firm on the price movements of the stock. Therefore, our aim is to beat the spread betting firms. How do we do this? Well, we believe that betting on momentum is the best way to make profit. What is momentum? Let's go through it again, this time in a little bit more detail. Momentum is essentially a trend. It can be very short term or it can be long term. Momentum relies in part on the psychology of the stock market trading. Here's some basic stock market psychology that could help you. When people believe something is going to do well, they all want a piece of the action, so they follow the herd. A few people buy a stock, more notice and then buy it, and then the masses buy, and momentum rapidly increases the price. It's for this reason that we always bet with the trend rather than against it. While the price of everything going up is a good position to be in for a spread better, here's why we prefer a bear market. A bear market, of course, is when confidence is lost and the value of many stocks goes down. It's a more profitable situation for spread betting, and that is because people are all of a sudden driven by fear. Fear is probably the most powerful motivator on the stock market, and greed closely follows it. These are the two main emotions that form the psychology that affects trading on the stock market every day. Here's an example. If we learned insider advice about a stock that was going to do well, we may buy, but there could be some lingering skepticism. However, if someone gave us advice about a stock that was going to crash and we had an investment in it, we'd act more quickly and sell our position as soon as possible. Times of boom and bust, therefore, are the most profitable for anybody who bets on the stock market with momentum. Most of your profits will, and most of our profits do, come from times when confidence is either very high or very low. This is when momentum is obviously the most prevalent throughout the stock market. And the beauty of momentum is that it can easily be seen on graphs. Here's how. Let's put some numbers on momentum. There are tools that we can use to measure momentum, and we use these tools with our own rules to make our trades profitable, and we believe that this gives us the edge that leads to consistent profits when spread betting. The best measures of momentum, and the only measures that we use, are ADX. ADX stands for Average Directional Index, and all this does is it tells us whether there is momentum or not. It's scaled from 0 to 100, and we believe that anything with an ADX of over 30 is worth taking a closer look at. The second tool that we use is called DMI. Now DMI stands for Directional Movement Index, and it's split into two components. There's DMI plus and DMI minus. Let's focus first on DMI plus. DMI plus is a measure of upward momentum. If this figure is high, we should take a closer look at buying into the stock, i.e. betting on it going up. DMI minus is a measure of downward momentum. If this figure is high, we should look into selling short. This is betting on the stock price to go down. Now those two tools, DMI and ADX, are the only tools that we use when we trade to find stocks with momentum. So that about wraps up the lesson, but it does lead to a question. How do you find stocks that have favourable momentum? Now the good news is that anybody can find stocks. You can find stocks with favourable momentum. The bad news is that it can be a long and time-consuming task. You may need to search through many thousands of stocks to find a few stocks that have good enough momentum and then other variables that are favourable in order for you to choose to trade on them. However, if you choose, we can do the legwork and we can find momentum stocks for you. What we'll do is we'll send you emails, but significantly, these emails are not to tell you to buy or sell certain stocks. They are merely there to aid with your research so that you can make better decisions when you trade. Our subscription emails will be sent to you in real time, so as soon as we find out which stocks have favourable momentum, we will send you an email and you'll get it immediately. However, this is not a tipster service, and of course you don't have to use it. This is merely another service that we provide. And you should use the information only as part of your personal trading strategy, and you should use your own intelligence to choose what to trade. It's your money you're trading with, remember, and our emails are merely there to help you with making the right decisions. It is not there to tell you what to trade. That about wraps up this video, and in the next video I'm going to be talking about the mistakes that people make when they spread bet. I hope to catch you then. Keep checking your emails and I'll talk to you soon. Thanks for watching.